we're back live in studio with Samuel Zurzer in the business headquarters of Radio Shalom, 1650 AM in Montreal, Canada, with the Money and Business Show. Samuel Zurzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100 extension 200. And now, back to the Money and Business Show.
Maurice Cousineau from National Bank Financial, and we're back with our special guest, Mr. David Gurwitz, who's Managing Director of Charles Nenner Research, and the show's coming live from his life in New York.
He's live from New York,
here in
exactly. David, welcome again, and welcome to the show. We're going to get down to business now. I know we have a lot of questions concerning, what would happen to the economy in 2002. But let's just start. We should start by saying that your system is quite unique. It's based on cycles, and they are used to predict the market's movement in the future. David, can you start with a short explanation of how your system works?
Yeah, exactly. Cycles, the English word, comes from the Greek word circle. So it refers to repeating, basically, sine curves, equidistant, because sine curve has to be not stretched. It has to be any data series, top to tops, like EKGs. When you go to a doctor and take a set of EKGs, your heart's every X, seconds. So if you take IBM's top, the computer will find that it topped every 18 months, let's go weeks, every 5 weeks, every 9 weeks, every 14, consistently. That's the whole point of it. It has to find consistency in a data series or 10 cycles within it so that it can predict the future based on the past. It works for stocks, bonds, commodities, currencies, economic indicators, ETFs. And Charles discovered this. Like I said, I stumbled into my piano playing. He stumbled into this while in medical school. And if I give you the background in 1 minute, it'll help understand it. He went to medical school. He's a doctor, amongst all his other talents. And the professor, this is in the early 80s, said they put more doctors on call in the hospital rooms when the full moon's coming, because women give birth at a higher rate during full moon. And it makes sense, because there's some reason that might happen. Then a month later, the professor said to Charles and the people in the class, people get admitted to insane asylums all around the world at the same time, and they don't know why, and it's not during a full moon. And then someone came to him and said, Charles, I have a company, I'm taking it public. He said, what's that? It's hard to believe. With a stock with a product that's a medical product. You're a doctor, you're going to be, what do you think of this product? Charles said, it's the worst thing I ever saw. The guy said, I know, but the market's good. We're going to take the company that makes it public. Couldn't understand. 3 months later, same friend said, I have another product. Charles said, this is great. You should make you a lot of money. The guy said, problem is the market's bad. We can't take it public. Charles is scratching his head. I don't understand. Bad product can go, good can't. People get admitted to insane asylums. I don't understand. He comes to New York a few weeks later. He watches a TV show with a guy named Neil Cavuto, who's a pretty anchor now and on one of the shows, saying IBM went up because of this. And Charles is watching, said, how do you know why? He goes down to the library, opens up a book, a New York Times, Wall Street Journal, and he finds in IBM, he looks at the stock for the prior 5 years, and he finds top to tops by hand, 8 weeks, 14 weeks, 22. He writes out the cycles, and he sees they're all topping the next week. Sure enough, the next week was a major top in IBM, and that's when he came up with this idea that any data series, it's easily shown in stocks or bonds or commodities or currencies, if you find cycles, multiple, not just one, but if you find many cycles, and when they all line up, because it's not always the case, either topping or bottoming, you can predict them. And he developed it, had a computer program made, wound up at Goldman Sachs for 15 years, was considered their secret weapon. And I met him 10 years ago, and we took a business, thank God, and we built a pretty big business. He also uses a target algorithm to give him price level. I'll give you an example. Last week, 3 weeks ago, he said buy puts on Apple when it got to around 705, which was an amazing prediction. But you needed to give a level as well as a direction. So in order to really predict, you want to give target, direction, and price. And he does all the three things. And then he looks at all the other indicators people do. And he's like a doctor. When you sprain your ankle, you're not sure if it's broken, fractured. You go to him, he takes 10 x-rays, and he looks at them. Charles does the same thing. Cycles, target, Elliott wave, MACD, oscillator, 200-day average. He lines it all up, and if they're all lining up, supported by the cycles, he says we're going to go long or we're going to go short.
So, David, with the elections behind us, the big question now is what happens with the economy? First,
Right.
What happens through, let's talk a little bit about what's happened to the end of the year. Is going to be more upside, and what's going to happen in 2013?
Great. Downside. Stocks are down overall until middle of December. Not all stocks, because China, you mentioned in your intro, China he's buying right now. He thinks all the cycles, the China cycles, FXI, 8 shares have bottomed, and he actually went long China. Why? He doesn't know. He says they're all bottoming. I don't really to know why. But generally, U.S. markets should be down to the middle of December. So, but he predicted it a while ago. He said in March it would pretty much stay flat, sideways, more or less, which it has. It had a down move and an up move, but he said we're going to kind of stay sideways and then be down into the end of the year. I remember a year ago he called for a buy signal on the S&P to 1449 and then revised it to 1460. That's just where it went. Next year, which you just asked, there'll be a rally and then down for most of the year.
2013 is going to be a down year?
Yeah.
Is it
all
because,
year, but
yeah.
Which is kind of what you said at the beginning of the show with the elections, when there seems to be president first 2 years aren't so great, second 2 years are.
Yeah.
But that's kind of what he sees for stocks, but not, let me stress this, not gold stocks, not silver stocks, not oil stocks, and not nat gas stocks, and not grain stocks. The hard and soft assets, which Canada has a lot of, right? Should be fine starting next year.
When you say hard and soft assets, well, we're talking about the
oil,
the oils, the minerals,
nat gas, gold, silver,
gas, silver,
and grains. Potash, place like that. Whereas, and gold itself is going to be on a buy towards the end of the year. That's what he's planning to look at now. And silver took everyone out earlier on in the year. Nat gas he called from $6 to $1.70, and a bunch of Canadian banks made loans to the big nat gas producers out west at $5, and they called their loans in about $3.50. That forced more selling. All this is predicted by the cycle. And then we went long nat gas, which he expects to, with this some short-term pressure, but he expects it to go back to $5.
Do you guys have any sense of where India and China are going to be over the next little while?
Yeah.
And consequently, what effect that'll have on other Canadian things like nickel and copper?
Well, good. Now, you asked a very good question, and let me answer your second question first. He doesn't ever think ostensibly anything affects anything else but the cycles. Just to understand, like people say, if the dollar's strong, gold has to be this or that. Everything to him is governed by its own internal cycles, and then we think about the reason afterwards. So, according to him, China's up now, and India is bottoming also, right? And you sent the chart out this week on both. But longer term, basically, copper's down 4 years. It's actually down over the next 4 years. While the other metals are up, copper is down. We do a lot of work for sovereign wealth funds, which are like these $60 billion funds run by these nations in the Far East. So they don't care about next week. They want to know 4 years from now.
But why
and we can actually predict that.
Now, it matters in Canada because we mine so much of it. I'm happy to hear nickel's going to be up, but why do you think copper's going to be down over
cycles?
Really?
Only cycles. We don't ever have a reason.
Huh.
Interesting.
So when I listened to you guys, when you were talking before about the stuff you look at, targets, averages, you mentioned something called MACD, which I'm sure most of our listeners may not know is moving average convergence divergence.
Right.
You're talking about all techies, technical indicators. I was a day trader. I was all about the fundies. Why are you am I correct in assuming you're all about the techies, and if so, you don't pay attention to fundamentals at all?
No, we consider cycles to be fundamental. I'll tell you a joke Charles says. When the first vans came out, Chevy van, 1970s, guy standing at the street corner, that's really amazing. And Charles says, let me take out a pad and start counting them. And the van comes out every half hour, so somebody walks up to the first guy and goes, you're the one that said that's amazing, a new type of car? You're the fundamental analyst. And they're watching Charles with the pad, you're the technical analyst. But really, if you think about it, the fact that it's coming out is one thing. The fact that it comes out every half hour is no less significant. When he called the Dow to go from 10.8 to 14.5, it's the first CNBC appearance on the site that everybody who's listening, I would recommend they go to charlesnenner.com and watch the top. You see a lot of the media. He called the Dow when it was 10.8 to go to 14,005, went to 14.2. And they had him on CNBC the first time and said, I can't believe you did this, because everything Greenspan didn't matter, according to me. Now, he did stuff, right? You could say he did something, but the cycles had within them the moves already. So, yeah, he looks at all the technical stuff you as a trader did. He looks at all the regular things, but what he does that nobody else can do is the cycles and our target. And so we become the overlay to a lot of technical traders who find in their systems what they see, and they want to know then what the cycles say.
David, I want you to just, we're going to be going to a commercial, David. Okay, we have another 30 minutes of questioning. That's David Gurwitz, is the Managing Director of Charles Nenner Research, also sitting in for Charles Nenner. My name is Samuel Izerzer for the Money and Business Show, Radio Shalom, CJRS 1650 AM Montreal. But first, we're going to be listening to Mitt Romney's concession speech of last night.
I have just called President Obama to congratulate him on his victory. His supporters and his campaign also deserve congratulations. I wish all of them well, but particularly the President, the First Lady, and their daughters. This is a time of great challenges for America, and I pray that the President will be successful in guiding our nation. I want to thank Paul Ryan for all that he has done for our campaign. And for our country. Besides my wife, Ann, Paul is the best choice I've ever made.